Alright, what's up, y'all? It's the next day. Starting this live stream right now. Before we get started, I'm promote that I'm live right now. Give me a second. Live stream. There we go. Alright, we're gonna get started. So the first thing we do, as always, is we look at Forex Factory to check what kind of news that came out. And the news that came out at 8:30 is 8:35. No other news today, so we're all good. So yesterday we took a trade. Um, Not this one. I took this for my challenge last night, and I'm up right now at break even. But challenges don't count. It's only for my fun. It counts. I'm showing. So yesterday we took a trade for USD JPY. Let me just show y'all what happened. I'm gonna show y'all the P&L and everything. It was on a 5 minute time frame. It's this trade right here. Okay, this was the exact trade that I took. So what we had here was we had a nice move down. We had the impulse small correction, and I set a buy stop of the high right here. Ended up breaking even once price ended up breaking that high with structure. I was looking to break even either about a 1-to-1 or a mini structure before that. So that's what I got. I was looking to manage this trade for partials, but my rules weren't met to take partials, and I ended up getting stopped out at break even. And this is a part of the game. Break evens are a part of the game. And that's what you got to understand with trading. Wins, losses, break evens combine together on your system to make a profitable system. So I'm gonna show y'all the P&L that was actually a break even trade. Let me show y'all real quick. This is for my that's my challenge. Switching over to the live right here, so y'all can see that the trades I took. Okay, we're gonna go into history, trade history. And as you can see, okay, this is the trade that I took, the 26 right here. Small break even. And let me go to this account too. See the trade that I took, small break even. So that's what I took so far. Let me just go deeper into the trade history, like so I can show y'all that everything that I've been saying has been accurate. So February, I didn't take any trades. So like, let's see, let's go into it. If we go to February, um, where is it? Oh, I adjust this date and time. How do I do this? I just saw it here to adjust the date and time. Order history, trade history. time range from, okay, February. That's not, doesn't make any sense. It's showing March trades. See? Uh, Trade history. Alright, that's weird. Alright, that's weird. You can see that there's no trades for February specifically. So far, we got some work to do in this account. We just following the process that makes money. So let's go back onto it here and let me see what's going on and see what I'm trading. So let me see that. We hop on a 30-minute time frame. Just gonna show up, do what I do every day, and see if there's gonna be an opportunity. Okay. We got to the high. Okay. We had the first. We had the second that was created. You just adjust everything. Just like that. 30-minute. 30-minute. It's landing in perfectly this area. So you see, USD JPY could set up right here if we start making a move upwards from right here. So USD JPY could set up in that sense. We just got to be patient for that. Shouldn't take long for that to set up since we're on a lower time frame. We had so my thought process is the same thing that I was expecting over here. So I was expecting a leg out of here, and it ended up just failing down after I managed to trade. So we had the same thing happening right here. So when we have a move under the MAs, that's called a flush. And once we make our way up and pause on the 10 or 20, that's our first potential fractal breaker structure. But in this case, it's a whole breaker structure. So I had over here. Let me move this over here. There it is. So that's basically it. You see how this area over here looks the same as the other area right here. So that's what I'm expecting. That's the thought process from that. Uh, and we're gotta keep in mind this was that overall high, so we gotta follow it along on a higher time frame as well. So I'm gonna be keeping an eye on USD JPY. Let me just analyze the other markets to see what's going on. So I added copper to the list last night because it was looking good, but let me see if it's still looking good. Yeah, not anymore. On this time frame, the context time frame, we're flushing down, so we needed a cycle to restart on this time frame. Because I'm looking for at least a 5 minute to 15-minute entries. even if I was to look for um 15-minute entry, still not in a good area because we're flushing, restarting the cycle. Yeah, copper, not good. Let's look at Tesla. Um, let's see. Tesla, we're not in a good area because we're flushing right here. Um, Something like this, probably maybe I would consider if I was taking a 1 hour entry, maybe for another a challenge or something. I would take this as an entry. Hmm, maybe. Maybe I'll take Tesla for an entry for my challenge, depending. Oh, never mind. The time frames aren't even aligned. It's in a bearish move. Because I was expecting shorts. It was weird. For the lower time frame, at least. Yeah, nothing is ready for Tesla specifically. Get a 3 minute time frame. You know, on a 5 hour. So the context time frame is showing us bearish. So the time frames aren't aligning for Tesla. So we're going. So the best one so far is USD Apple. Same thing for Apple. US 500. Let me see what's going on here. US 500, I can tell already from this spot it's in. I don't even need to go on the lower time frame, but it's not clear because we're flushing out just like the other pairs. Ooh, silver looks great. I think it looks great because gold is going up too. Um, yeah, my analysis is playing out from yesterday right here. So we're gonna see if there is a way to get involved in any of the ones that look clear. So the whole job is basically you show it to the market, you analyze and see which ones is the best pairs to potentially trade. A lot of people can't wait for the clearest opportunity, and that's why they feel long term. So that's a validation breaker structure, depending on the time frame that I'm using. So let me see. If I go on a 30-minute time frame, start with the 5 hour. So the 5 hours in a good context. So we flush, take the first. So let me just delete all this right here. That was just a higher time frame analysis. Do a lower time frame analysis. Context time frame. Stay above this point right here. So you like to wait for the like say if you're going for buys, you want to wait for for the charts to prove that buys want to come into the market. So flush, okay, flush right here. Um, let's see. Everything looks good. So we had the flush. We had this right here. This would be the context breaker structure one. This looks extremely good. All right. Let me see what the lower time frames are telling me. We're moving higher. So if we can pause right down to this 10 or 20, I can go on a lower time frame to see what we got going on. So far USD JPY and silver or something I'm both eyeing to look for trades. Gold, on the other hand, let me see what's going on with gold. Oh, shoot. Yeah, gold I could possibly look for a lower time frame entry. So for silver and gold looks move similar. So if I was to pick between gold and silver, I'll have to pick one to basically look at because they move similar and stuff like that. Because if I analyze gold, so I'm in a trade for my challenge right now. I entered this last night. So I don't usually on record the challenges for live. It's only the funded accounts. So basically we have this flush on the higher time frame. This was like a higher time frame entry because price is fractal with what it does. It repeats over and over on every time frame. So we flushed right here. So the context time frame looks great. If I go on the validation time frame to validate the move, it's actually setting up right now gold for the lower time frame. Yeah, better than silver. So let me see what's going on. Let me actually move this trade out the way so I can have some clarity right there. Because we flushed down here, we made the first validation break. The second potentially. If I go on the lower time frame, it's probably at the 50, probably setting up right a trade right here. Yeah, I could set a buy stop right here. It's moving good right here. These ones are this is like an early entry. So we have the impulse, we have a small. The early entries are usually I'll say there's two sides to the coin. Wait, let me actually enter this first before I start talking. Let me look. Wait, I have to wait for this candle to pause first. So basically in the next 4 minutes. So I'm gonna just get my entry prepared. Basically just quickly just get everything set up. I'm gonna explain to y'all the two different types of entry. What I noticed when I look back on my trades from like a year ago. 30.51. So it's a buy stop. I'm trying to get in. If we can get that move. 30. I'm calculating the lot size on my phone so it can just be faster. Especially since I have a lot of tabs open. I don't want my computer to freeze up. Calculate. Oh, for this one, instead of the buy stop, I'm gonna mark it execute just like yesterday. So above that high. All right. So let me basically explain. So this is an impulse small pause for a buy stop. These type of entries that are much lower, they can work out great in your favor. There's a pros and cons to it. They can work out great in your favor because you're getting a lower entry within the range. Whenever you get a lower entry within the range, it's good because price you have more room for price to play around as it goes up. But the con for this as well is you can still get stopped out early because it's so low. So price can easily like wick and then start moving down. If you get what I'm saying. So the lower entries are more like, okay, they could still fail. They're likely more to fail, but it's still a high probability that if once you get into the trade that you have more breathing room. So the second type is after this has been proven and then the MA starts to rise up. Those type those type of entries are more, I'll say, in the middle because you have to manage the trade much quicker because since you're more higher up, it can easily go like break the high and then instantly reverse. But those type of entries, when they work out great because they just impulse and go. So those are just pros and cons. There's always going to be pros and cons to an entry system. So I'm just waiting because gold does look nice. I'm entering it for all my accounts on the trade copier. And then if I do get this entry, I'll just show y'all the P&L as I go. And this entry actually looks similar to the higher time frame entry I took for the challenges I have last night and everything, but it looks very similar. So soon, if we get below this low, then I'm just not interested because at that point it's not making structure. This is basically structure I'm buying into. Demand, all of it is the same. Then y'all gonna see as I live stream every day that I don't care about the individual's trades because money is made by multiple trades, break evens. If you look at any like okay profitable system, someone with a 30%, 40% win rate, look at their loss rate, their break even weights, and their win rate. What people don't see behind the payouts and getting funded is the actual trading, the losses that come with it, the break evens that come with it, and the wins. The wins just eat up the losses. Trade management. So we're getting higher. We're just waiting. What's up, bro? What's up? What's good? If you haven't seen already, I reviewed the trade from last night is in the video. Not last night, but I reviewed the trade from yesterday. And I took a trade for my challenge right here. So I don't record trade challenges because I don't feel like the challenges matter. Only recording it for a YouTube video, but these are just for the funded accounts that I record. But if we look real quick before, let me just hurry up to show you something. This entry for the higher time frame is like basically the same entry that I wait for, like impulse, pause, go. And mind you, that was my first time taking a swing trade because that's basically a swing trade, a higher time frame trade. That's my first time ever taking a swing trade. But price is fractal. Price moves the same across all time frames. You just need to align it with certain time frames so price can make sense. But that's as you go and stuff like that. For my challenges, I just want to like they don't those don't matter to me as much because those aren't real money you can really withdraw. So if I could take a trade and it actually works out in my favor, then that would be just beneficial to me. But I'm just waiting for this entry right here. Mm. Because if I was to even say, okay, my entry, if I was to look at a even lower time frame from this, right? In my case, this would be looking like a flush, and like the cycle just restarted. So my entry is basically the I'm assuming the cycle's restarting from this point, and this is my entry point. So as price comes under the 10 and 20, it flushes to the 50. If I was like a lower time, even lower time frame trader for this move, where's my path tool? As price pushes out of this area and start pauses on the 10 and 20, like how it's doing on the higher time frame, right? It's gonna look exactly like this when it pauses on the 10 and 20. So that same pause on the 10 and 20 is basically what the 30-minute is doing right here. It's pausing on that 10 for a move higher, potential move higher. It's not guaranteed at all. I don't expect my trades to work out. It's just probabilities. I'm just watching this low right here. Just watching it. This is the thing I like about buy stops as well. Price can fail, and even if you are wrong, you don't take a trade at all. All right, we're almost down to the fail point, which is that line right there. All right, yeah, I'm gonna consider that a fail because I like clear like structural moves. So I'm gonna cancel the order. But I didn't even have an order set anyway. I was gonna mark it, execute it. Simply, if I want this to it can still set up. This doesn't mean that it's invalid. It's just the structure doesn't really look too clear. It doesn't really look too clear. Like I have to zoom in to see it. Nah. So what I will wait for, I'll basically wait for this again. So it's still at the 50, still in the good area. So just a move up, pause, and I'll wait for that buy stop. Nothing more, nothing less. You just quickly look at the other ones. So USD JPY. USD JPY, I think it's failing down a little bit more. Hey, so just in case you didn't see, this right here was a break even right here. Ended up being a break even. Those are just a part of the game. And if you look right here, when I expected a move to happen, it didn't happen. Analysis does not necessarily mean like when your analysis fail, it doesn't mean that you're losing money. A lot of people they focus on making sure their analysis is correct all the time. Yes, analysis plays a point with your own trading, but you don't have to be correct to actually make money. And you don't have to be wrong about the analysis to lose money. Like this, I was wrong about the direction, but I didn't lose money. And all I got to do is just wait. And now it's setting up the same thing that I'm expecting here. So maybe we can make a move. Maybe I could take a partial before it breaks down. Or maybe it's going to start a large run. So those are the things that's going on inside my head. So USD JPY does look good. Good. I'm just waiting for one of them to set up first. Whichever one sets up first and the clearest. So I think gold can still set up the on the first and the most clearest just because the spot it is in compared to USD JPY. So USD JPY is under here. I would need it to basically do more of a pop above, more of a pause like that. Buy stop. So those two right there. So I'm just keeping an eye on it. Ooh, just waiting. Just waiting, just waiting. Well, it's about okay. It looks like gold is the one to likely set up. Actually messing with the 5 minute time frame. I'm actually messing with it. Like I don't have to wait so long for opportunities because it got annoying with the 1 hour time frame when I had to like wait like okay it's about to set up but an hour after it's not gonna really have volume so I have to hop off the charts. So the 5 minute is really good. Yeah, my phone not charging. Yeah, I'm gonna be eyeing gold. Like something like this. It's not too okay. I cleared the high again. So, all right. So this is what I'm expecting. We're moving nice with my original entry. Woo. All right. This is what I'm expecting basically. This trade, I mean this area right here, it made a low. That's the low right here. This is basically structure happening right here. So we made a low right here. This is the high point it made. So in the next 5 minutes, so after this candle closes like this, if we can get a pause, so a candle that prints before taking out this candle's high, I'll set a buy stop above this area for a trade. So that's all I'm waiting for. This is just structure. Low, high, low, high, low, high. And it's gonna a lot of the times these lower time frames are gonna be these lower time frames basically are just gonna be aligning with the higher time frame. So if I get a trade here, it's just gonna continue the initial move for the trade I'm already in that goes with the 6 hour. So it's just time frames just move with each other. Damn, I'm glitching here. They move with each other. Since I'm at break even for this, then I will have to wait like 2 days for my first partial for this challenge trade. But let me stay on this time frame so I can watch it. So we just waiting. And if it pauses right here, if, for a stop loss placement, since it's the lowest point entry, because this would be like the lowest point entry right here. I'll just put my stop loss under the low because at that point it would be like invalid. Not necessarily. It could like flush like if it tagged me in early, or yeah, if it tagged me in, it could still like come down to the 20 and make the setup, then go higher, or just completely fail down with no entry confirmation. So either one of those. Then you want to make sure your stop loss is a decent size as well. One good tip is when you make sure your stop loss size, like you only take trades where your stop loss size is it's not too large, not extremely small, then you put yourself in a good spot because you could take more out of the market. Like, let's say right here, you could get a 2R, but if your stop was larger, that would be a 1R, and you probably wouldn't have got a partial for the same move. Yeah, just waiting. If it takes out this low right here, then I had to just wait again. Just wait it. Just wait. It's all a waiting game. Just like that. All a waiting game. Analyzed. Just waiting. So after this candle closes in what 15 seconds, we gotta wait for one more 5 minute candle so we can have that pause because this is the new high it created. Hey, let's see. Is it gonna take out this low? Is it gonna take out this high during this on time? You'll see. You'll see. So while I'm waiting to see what price is gonna do, I'm gonna still have everything prepared, like my stop loss, sizing, and everything. Have it prepared. Actually, is it gonna take out the low? Yeah, it took out that low right there. So guess what I do? I have to wait more. A lot of people can't wait. Here we go. Nothing to do. We're gonna wait some more. So it's pausing more on that basically that 10. Yeah, okay, we had a nice move down like that. So it's failing down, but it can still set up by popping back up and creating the setup. Let's get on USD JPY. Yeah, it can make a setup like if we can, you know, we move above here, that setup right there. Yeah, USD JPY looks like it can set up first. It's eyeing both. Eyeing both. Yeah, I like that move. I'm just flipping through it to see which one. Yeah. I'll say this was like the price moved over this high right here. This is basically a fractal breaker structure. A breaker structure happening on a lower time frame. So I would just basically wait for one more, like as its own pauses against the MAs. Because at that point that would be like a fractal double breaker structure on a lower time frame. So remember how I said a double breaker structure in one direction is a good confirmation, like on the higher time frame if you have like two breaks of structure or more, we're bullish. This is basically the starting point. We was moving bearish short term on the lower time frames. We broke structure once on the lower time frame. Now if we pause right here, that will basically be like a pullback on a lower time frame for a second break of structure. That's basically like the thought process of the entry, my entry. A lot of the on trading strategies you see online, they're all like basically just the same thing over and over. Like people try to overcomplicate it, but a lot of the times things are gonna line up. Like if you trade support and resistance, it might line up when if you trade supply and demand or stuff like that. Certain things like that. That's why you never gonna see me online talking about like other people's strategy because if your strategy works one way and you do a certain thing, I don't know what you do with your strategy. If it makes you money, it makes you money because everybody trades differently. What I would basically just focus on is your execution. Are you following your rules? Did you even test that system that you trade in? How much confidence did you have? Those are the questions that I would ask. So USD JPY, let me flip back over to gold. So because gold, like this one, it looks like it's gonna set up first. So I'm gonna be trading on USD JPY first. The reason why I do it like this is because I don't want to be waiting for gold to reset up and then it ends up failing and then that whole time USD JPY had a clean setup because the markets are fractal. So if I can get one entry first, it will be great. So let me see what is it doing right here. It cleared the next high, so I have to wait some more. You see right there, it cleared the high. So I have to wait for this candle to print, then the next 5 minute candle to happen after this to even decide to take a trade above the high. I'm just seeing. Let's see. What am I going to talk about? Oh yeah, this is what I want to talk about. Lower time frames. You need to have risk management. Doesn't end with just risking 1% or half a percent per trade. It doesn't just end there. It ends with your like trade execution. And for example, what do I mean by that? Let's just say you had an area right here, right? You took a trade in this area and it ended up being a loss, right? Let's say it sets up again and you take another loss in this area. Trade management, or risk management in this case, could be you after you take those two losses in a single area, you stop trading and you wait for a new range. So you instead of looking for another setup in that same area, you basically wait for a whole new range to look for a setup. Because at that point, if the setup wanted to work, it would have worked by the first or second one. Or depending on how your testing is, if your data says that usually the trades work within the first, second, maybe third, then you can have rules around it where okay, if I take a loss in the area, I'm gonna allow myself to only take two losses in one area. That's a form of risk management. Because if you're risking 1%, but you have no stop loss and basically something preventing you from taking multiple trades in the area, you can be down 7% in one day just by risking 1%. Yeah, you had correct risk management, but you was just taking trades in one area that was proven not to work. That's why like because the lower time frame shows a lot more opportunities. So another one you can do is no more than two losses in a day. So even if it made a new range, if you took a loss right here and it made a new range and then you took another loss, you're done for the day. Another one is no more than three losses in a week. No more than three losses in a week. And the reason why I like to say losses in particularly is because it's gonna give you a huge advantage when your winners do come. So for example, if you take let's just say you took three losses this week. So you start trading. It can be Wednesday that you took the loss, so you don't trade Thursday, Friday, right? When you show up on Monday, and mind you, these losses don't necessarily have to be 1%. You could have cut your loss because of your rules, and it's not really much of a big loss for the week, but you still have that rule of three losses. Now, when you show up on Monday, let's just say you took a nice huge, it doesn't even have to be a huge one. The fact that you had rules to cut your losses, the fact that you only took three losses with a like a 3R gain, assuming that you just got stopped out at 1%, you just covered all your losses from last week. Follow the same rules. It's really um easy depending on the work you did prior to get back into profit and stuff like that. One thing that I hate about the higher time frames is, okay, when you're trading the higher time frames, um basically like you're gonna be finding way less setups. Like the fact that I found way less setups, um and I'm on the 5 minute time frame. Like when was on the 1 hour time frame, I would find way less setups. And a huge disadvantage for finding way less setups like that is your drawdown periods can be a couple months rather than a couple weeks. So if you're on a lower time frame, your drawdown months might last maybe a couple weeks. Well, on the higher time frame, it may last a couple months because of the markets. But one thing you can do as well is look at multiple markets as well, a whole bunch of markets, so you can find the best one that goes with the market condition of your strategy, so you can find an opportunity. But the one issue that I have found with that is, even though I looked at a lot of markets, some of the markets for my prop accounts, like they're not available. So that was something that I had to like fix. That's the whole reason why I had to switch to the lower time frames, so it can make sense for me. Because me personally, I'm not trying to like go through a long period of having a drawdown months just because I'm just waiting for a setup on the higher time frame. So true, the next 3 loss for the weekend. Yeah, I implemented that years ago, and it definitely helped because when I first started trading, I used to be on the 1 minute time frame before I switched to the higher time frames, and it really helped. Especially because if you think about trading like this, trading all profitable trading is just math. Like I like to say different things like in different ways so people can get it. Like profitable trading is just math. So when you limit yourself to 3 losses in a week and then you have rules to cut your losses, and at the same time you allow your trade to potentially be a large runner through partials and stuff like that, or if you just have a set target of a 1 to 3, it's going to be way easier to cover those losses. You have to think mathematically. That's how I think with my trades. That's the whole reason why I will never like over risk on a trade now personally, because I don't look at it, oh, to make money right now. I look at it from a mathematical sense. If I, like, for example, if I see a clean setup, no matter how clean it is, does it make sense for me to risk 5% on the trade when before I was risking 0.65? No, because there's a chance I can potentially lose that trade. Which gets me to the next point as well. Um, I on top of a lot of people say they have a problem with over risking. My thought on this is nobody has 100% win rate, right? No matter if your percentage is a 90% win rate, 80% win rate. Yeah, those percentages are high, but the fact that we don't win 100% of the time should already show you that you should not be over risking on your trade. Because let's just say you have a 70% win rate, right? There's still a 30% chance you can win, you can lose that trade. So would you really want to all that hard work you just did of risk management, of risking a set amount per trade, not really going too off of that? Would you really risk 30% chance of you losing that trade, and then boom, all your gains, all your hard work, all your waiting goes to waste? No, it wouldn't make sense. It wouldn't make sense at all. So that's how I think about it. My win rate sits around 30 on a good quarter, 40%. But it wouldn't make sense for me to over risk when I know that from like 60 to 70% of the time I'm losing. It doesn't make sense. So you just want the math to play out. That's all edge is. People ask, what is edge? Edge is just making it like finding a strategy that you can make sure like either you're finding more consistent trades or your winners are way bigger than your losses. And basically, if I when I study like what makes a large trend, this is basically the foundation. What I wait for is basically the foundation on how large trends start. It doesn't mean that it's necessarily going to happen because I can manage into it, but it guarantees overall long term me executing those same rules that over time, even when my drawdown periods are happening, I'll I may potentially get like a large runner, maybe even a small partial and stuff like that. There are times where I would aim for a set like 1 to 2, which I just started testing as well, based on where we are in the cycle. An example like that is basically, so I talk about this, right? After you get the flush, you're gonna notice at least 4 to 5 of these fractal breaks of structure that pauses on the 10 and 20, right? If it really wants to make a trend. So if I'm notice I'm on the fourth one or the fifth one, I may just aim for a set 1 to 2 because at that point I'm expecting price to reflush. So it wouldn't make sense for me to like hold the trade. So something like this, I would decide if I got a trade, I would decide to hold the trade because we're just in the beginning of the cycle in my eyes. So we had the flush. This is the first one. So we have we can still make the second one, the third one, the fourth one, and may start to fail down right here. Basically, that's a bad joint at the end. We hop back on this lower. Okay, it's pausing right there. I'm gonna set a buy stop. I'm a not a buy stop, but I'm gonna market execute. Um, I want a decent stop loss, nothing too crazy, but something that makes sense. Yeah, this makes sense. That can pause. So I'm calculating the risk on my phone, and then once I get into trading, I'm gonna show the P&L and everything. Position size calculator. Uh, oh shoot. Three. Um, stop loss size. 15. 6, 8, 13. 743. So I'm just getting it all ready. 743. All right, there we go. So I just there we go. So I'm not in the trade. I'm just waiting for it to get above that high, and then I'll enter it. Patience. Another reason why I felt like it was good switching to the lower time frames is to show y'all more entries, because with the higher time frames, it's a lot more waiting. Y'all not seeing a lot of entries. And the whole point of me doing these live streams is to show y'all these the short term losses and the short term wins, like all that is needed for a system to be profitable. All that's needed. And plus to show some transparency with my channel, because I'm giving free value. I'm not selling y'all anything or anything like that, but I'm giving free value. So if I'm talking about trading, I might as well like show that I can trade and stuff like that. So yep. And I feel like it's also helpful to a person like, okay, um, this is what I need to do. Oh, I shouldn't apply for that challenge yet because I haven't proven myself through multiple forms of testing. I need to do the proper work. Oh, my psychology is messed up because I haven't tested my system for hours and I haven't demo tested my system to see if it even works um on the charts, certain stuff like that. Because I can guarantee you, if I walk up to most traders, if I guarantee you, if I walk up to them and be like, "Do you have at least minimal, at least 100 trades in your journal? Do you have at least 100 trades?" Most would say no. Like, what do you think the failure rate of trading would be if basically um if what would be the failure rate if basically if there was a requirement to trade? So let's just say you're a requirement to even trade a prop firm, um, or even place a trade. You have to have a minimum. You have to have a minimum of, let's just say, 200 trades back tested, and you have to have a minimum of at least 6 months of demo testing, and they all have to be profitable, right? Let's just say that was the requirement. Don't you think more people would be at least see some type of result? But the problem is the way how the industry is created, the way how a lot of the YouTubers online make it seem. They make it seem like it's this, like, yeah, you can make a lot of money, but they make it seem way too easy. And when people see that, their first thought process is, I'm gonna get rich. I need to throw money in and you know do whatever. And I ain't gonna lie, I did that too when I first got started. I'm watching this real quick. But I did the same exact thing. I watched. I got introduced through what's it called? The MLN. Um, back in 2020. I didn't even last a week in that. I left after a week. Uh, what else? But I was on YouTube looking at every single strategy, writing in my notes. I'm about how to get rich in a month. And I'm not saying I'm rich, but at least I finally got a strategy that is getting me payouts, got me funded, stuff like that. Because I'm thinking about the long term. Because if you can do it on a small account, like you can do it on larger accounts. So this year I have bigger accounts than now from my previous years, so I know I can make more money compared to what I did on the smaller accounts. Like trading is the only industry where you can do the same amount of work and get paid more. And what do I mean by that? The same the same entries that I'm taking right now consistently. Let's just say you let your account compound or you just added more funded accounts on top of it, right? The same execution that you're taking for those trades that were making you $1,000 is going to be the same entries, the same trades you take when you're making $10,000 a trade, 20,000, 30,000. But people don't think like that. So it's failing down. This point at this point right here, I wouldn't necessarily, like, even if it doesn't take out this low right here, I wouldn't go for this right here. This is just on based on like testing or how clean it looks. And the reason why I wouldn't enter it even if it doesn't take out this low point right here is the way how it aggressively is breaking this MAs right here. Like it's failing the MAs aggressively.
So it just shows me it's reflushing down. It doesn't look clean. And plus my stop loss would have to be a bit bigger. I like to what I started doing was cherry picking my entry. So I want my stop loss to not be too big, not be too extremely small so I can get more out of the market. So when the move does happen, the same move that okay, if I had a bigger stop right here, let's just say there was an opportunity right here and this was my stop loss. And in order to get my rule of the candle closing above a 1 to 2, it needs to be all the way up here. So the same price movement. But let's just say my stop was something like this. Instead of all the way up here, I just gotta wait for the rule to be met, the closure of the candle. I explain my rules and stuff like that as I on go. But the closure of the candle at least to 1 to 2 or more, it'll be way easier to get that partial with just a decent size stop loss. And it will be way easier to make more money out of the move, especially if a larger trend wants to occur out of it. So let me quickly, so since this is failing, I'm gonna quickly let me exit out of what I was doing right there. I'm gonna quickly look at gold because I was looking at gold, and look at this real quick. Notice how in the beginning of this on live trading, I was looking at this area, and this is what I mean. Analysis, even though you can have an analysis for your on your trading, it doesn't mean execution. It doesn't mean that you're losing money when you're wrong. I'm not concerned whether I'm wrong or right about a trade. I'm worried about did I execute my rules properly? Because even though I was expecting a move out of this, the setup had failed. I took no trades. I lost no money, and that's the most important thing. So now I can go back on the higher time frame and see what the on higher time frame is telling me. So honestly, it's failing under the MAs. Like it's failing under the MAs right here. Let me see. Can we make a move? I will probably have to give it one chance to still make a move. If I wanted to look at gold specifically, I would need proof it wants to come up by it moving up like this. Because at that point, it's breaking structure on a lower time frame, right? Make that pause, get a buy stop in, something like that. But like I said, analysis does not mean execution. USD JPY still looks like the one that can set up the most, even though it failed. Like I said, I'll just need like a move like that to happen. Like there we go. That's all I'm waiting for because we're still holding up at that 20 right here. But if there's nothing to do, it's probably just gonna reflush back out, and then I just have to um wait. Any thoughts on? I have no idea what that is. What is it? I have no idea what that is. Um, let's see. Let me see what my challenge trade is doing real quick. 4 hour entry. Looks like I might get stopped out at break even for this trade. For this was a challenge trade, so and this don't matter to me. Okay, let's see what's happening with gold. Yeah, it looks like it's just failing down. I gotta see how this candle like closes because anything can happen in this 22 minutes. Wait, wrong time frame. Yeah, I'm not interested in gold anymore. If you look at gold now, the analysis has failed. We were reflushing, so all I gotta do is just wait for the same thing to occur. Nothing to do. Nothing to do. Let's see. Yeah. So I'm gonna put this in like just blue so I can like okay. That's invalidated. I mean, if I was looking for a 15-minute entry now, it would make sense. I like to switch between time frames. Gold. Yeah, this could set up for a 15-minute instead. Let me see what cause we flushed. Created the validation breaker structure 1. The context time frame. Flushed. 1, 2. So I'm thinking about 15-minute entries because my entry is gonna range from 5 to 15, depending on how the market is moving. Just taking a look at what it's doing to make a decision. Okay, we flushed down. We flushed. Hmm. And let's see. If I was looking at this, I would probably do a yeah. Hmm. A lot of thought goes into the like deciding whether I should trade a market or not. Okay, so I'm switching to the 15. Lower time frames no longer look clear. 15 minutes does. Not really. All about what it does and at that 20. Yeah. Um, that's the validation. 1 hour. 1 hour. Right here. Validation. Hmm. Let's see. Which one looks better? Which one looks better? 30-minute, 1 hour. Let me take a look at the daily. Alright. So basically what I'm doing now is I'm going between time frames because I'm gonna look at how the 15-minute looks because the 5-minute is failing. So I gotta use a few time frames to see if that even looks clear. So 1 hour. Yeah. So 15-minute for USD JPY wouldn't look clear for entries. The reason why is because I would have to consider the daily time frame. And the daily time frame is just showing me bearish structure, so it's not moving a line. So it wouldn't be um basically it wouldn't be smart to enter a long position for specifically a 15-minute time frame because the context time frame is a daily for 15. Then I will have to go on a 1 hour. So even though it's starting a cycle on this 1 hour where we're flushing like that, and you could potentially wait for a setup right here, it wouldn't be wise because of the daily in this case. So usually when one time frame, like a lower time frame, when it's not clear, like a 5 minute, usually the higher time frames for or like a higher time frame like a 15-minute won't be clear, like a time frame up. So you see how that's breaking down. is breaking through. So yeah, the 5 minute is definitely not clear for USD JPY. It looks like we're gonna just reflush, and simply there was nothing to do. I didn't take no trades. So I'm gonna skip over USD JPY because the context, there's nothing to basically do. Unless it starts moving later on, because we gotta it's I gotta remember I'm on a lower time frame, so it's 9:44. It could do something on after. Let me see. I know the 5 minute isn't looking clear for gold, so let me see if there's a way to get in for the 15-minute time frame, because time frames are fractal. So if I look at a daily time frame, okay, this looks a lot clearer. Now this is actually aligning. We're overall bullish. You know, we have bullish structure forming, breaks of a low for the purpose of breaking the high. We flushed onto the MAs, and we're starting a cycle where, if I can just label this for y'all, this is the flush. Oh, I can't spell. This is the flush. And potentially, I call this context breaker structure 1. Just so I can know where I am, because you have to keep in mind the higher time frames on cycle as well. So if we're on the fourth one on the higher time frame, then I know like price is almost there to fail. So let me go on to 1 hour real quick to validate on what I'm seeing. Um, let's see, I'm still in this trade, so I'm moving this over right here. All right, so we had a flush right here. Consider this the first one as it pauses. This could be the second one. One rule I do have is if it's too close to each other, you can consider the whole one the first. So I can consider this one the first. So that's the validation break of structure. One is pausing on that 20 right here. So maybe there's something on a 15-minute that can set up. So this is the beautiful thing. So if the 15-minute does want to set up, in this case, there will have to be proof. And the proof will basically be the same thing that I was waiting on for the lower time frame. And show you right here. So I'm just gotta wait. Everything else I don't think is doing anything like I want to see. Like if I'm not gonna trade silver because I'm looking at what was it, gold? Yeah, this just failed out. I was looking at copper, but it's not aligning for the lower time frames at least. We had a full cycle play out for copper, and I missed it because I just put on copper from last night, and I was like, yo, copper looked beautiful. We had a flush, paused at a 10, paused. I was expecting it could make a fifth one, but like I said, 4 to 5 of them makes a fourth one. It looks like it's reflushing down for this higher time frame specifically. So and this is a 6 hour time frame, so it's probably like flushing down. It's probably just gonna chop around a little bit, and then the first move up, it's probably gonna do something like that, start to reset up and everything. Tesla, I was short term, like I was like bearish for a little bit because for the 5 minute at least, but there's a clash of time frames and it looks choppy right there. Let me see. If I was to trade a 15-minute time frame, I would have to look for longs though, because if I'm taking into consideration the daily, if I took into consideration daily, we're basically making the structure like this, where we're breaking higher, we break a low. So what do we expect? The target is the high. But in this case, specifically for a 15-minute, I wouldn't consider it because we're still in like a flush state. So we still want a little bit of proof. I think even if we go on a lower time frame, something like a validation. Okay, the validation looks potentially good. We could wait for a clear of the high, like for this to start a cycle on the daily. If I wanted to do a 15, keep my eye on particularly gold for a 15 minute because that's the closest one that could set up. But if gold ends up failing, that means none of the markets that I have on this watch list are actually good. So there's two things I can do. I'm gonna take a look at some more markets to see if there's anything that's aligning with my strategy. If not, then I can just end the live stream early, hop off the charts, and go about my day and show up tomorrow. Oh, this is a waiting game. 15 minutes is gonna take a while to play out too. I think Euro USD was looking good last time I looked at it too. So I'm gonna take a slight peek at Euro USD. I think it was having a nice cycle last time I had checked it. Oh no, it doesn't. It doesn't have a cycle. I could tell. Let me go on the higher time frame. What's it doing? Actually, okay, bullish, bullish. Yeah, we have a disalignment with time frames all the way down here. Even though it made a small double break, consider the fact, like, look at the MAs. These breaks were very minor. So it's not something I would look at for any 15-minute entries. What about, let me see, if I was to do a 5 minute, I would need, let's see, if I was to do a 5 minute, yeah, even if I was trying to consider a 5 minute time frame, it wouldn't even be ready for me. And that's the power of multi time frame analysis. It forces you to be patient. Like even if you want to go down a time frame, you can't because of the multi time frame analysis. So that doesn't look good. So I'm gonna just keep my eye out with this one right here. And it does have one chance to try to prove itself. Do do do. Wonder what else I should talk about while I'm waiting. I'm just saying anything that comes to my mind so I can give y'all value. Mm, mm, mm. Um, not firm. Let's see. Me personally, I like going for the forex prop firms instead of futures prop firms. Like I have never tried a future prop firm, but the one thing that's holding me back from trying it is the fact that they usually have trail and drawdown, and I feel like trail and drawdown is a way for just the prop firm to take your money. If I'm being honest, because if we look at any system, a system can be profitable. Like it doesn't make sense as you're going making profit for the prop firm to just move your to trail you up. Um, if, based on my understanding on what they do, I think they trail you to a certain amount, but at the same time, like profitable trading, like your equity curve can look something like this, where you have a huge swing, maybe you have bit of drawdown. Drawdown happens to every trader, but it doesn't mean that they're a bad trader. New highs and stuff like that. Depending on your system, like equity curves can like vary depending on how you take profits, certain things like that. Let's see what topic I can talk about. Mm, One thing I don't like on is people who say take profit when you're up $500 or $1,000. The reason why it can vary. I don't like when people say take profit based on a dollar amount because you could be up $500, but that could only be, let's just say, 0.5% of your account. It wouldn't really make sense to take that profit. Or $500 can be like 0.20% of your account. So it wouldn't make sense to take $500. I like to say take profit based on percentage, how much you're risking. So if you're risking 1%, then okay, maybe you could take profit like if your account balance is $100,000, right? You risk 1%. Okay, maybe you could take profit at $1,000, if that's your system. But always like watch out for like people who say take profit based on that because it can get you in this cycle where you're risking way too much, right? And then as soon as profit comes up a bit, you take profit early because you see a dollar amount. What else should I talk about? And the purpose of the live streams isn't just to like I don't want people to like copy my trades. The purpose is just for me to show like the wins, losses, and all that is needed. Because if somebody, let's just say somebody was to copy my trades, right? They wouldn't have the type of confidence I have for my system, just for the fact that they haven't tested the system. So if somebody's copying my trade and what's it called? They don't have confidence in my system, then they may either change the system when it's on a losing streak, or they may take profits way too early, or do something emotional because they don't have confidence. That's why I don't really agree with like the signal services and everything because people can show up when you're on a losing streak, but it doesn't necessarily mean you're not profitable. When getting partials, do you think it can be easier to get big partial first and leave it on last? can get in partials, one thing you have to one thing you have to consider is your stop loss size. How big is your stop loss? Because it's way easier to get partials when your stop loss size is a decent size, depending on the time frame that you're on. So, for example, I talked about it in the live stream. Basically, this like this trade as an example right here. I took it on a 5 hour time frame slash 6 hour, both the same thing, right? If you look at the stop loss size, it's not really all too big for this time frame, right? So in order for me to get a partial, it doesn't really have to move a lot for me to get a partial. And the partialing is based on your rules. You know, I have a rule for where I want a partial. So that is still like up to your system and stuff like that. So it all depends on your stop loss size. If your stop loss size is a decent amount, you can get more of them out of the market if that's what you mean. And questions like that, like you can also test it out as well. Back test any type of question, like anything you want to do, you should test it out. So, for example, maybe you're a person that doesn't want to do partials, right? So instead of doing partials, because at the same time partials, like you're taking half or whatever. Let's just say you want to just have a system where you're trailing your stop loss, right? You have to recognize the pros and cons to that. Like when you do get a huge winner, you're gonna have your full position. So if you do catch a simply like a 3 hour gain or 4 hour gain, is gonna be the full thing, right? Or what else? You have to recognize that you're gonna have to have some type of rules that help you at least take some profits earlier, because most of the times the move may not happen all the times and stuff like that. So there's just rules that you gotta test. Because if you look at my channel, my rules like for management, they change like sometimes. So that, and it's based on my testing which one I like better. So initially before, like, all right, I would have that rule where I'll take that partial if the third candle closes at a 1 to 2 or more. So if it closes at a 1 to 2 or more, I'll take the partial, right? And the second way I trailed the rest of the position was with the 10 on EMA. So basically, once I get it, say if I was in a trade right here, I'll basically trail the position until I get a break of that 10 EMA for that second position. But now I recently changed that because I noticed I can get potentially more out of the move if I just went on the entry time frame and I just trailed with the second low. If a longer trend wants to happen, it's gonna hold above the second low. So what do I mean by that? Basically, as structure is getting put in like this, let's just say we have multiple structures like that, right? Let's say you had an entry right here. That's your entry point. And say the current price is right here. The current price is right here. As price is going up, instead of trailing with the most recent low that a lot of people may do, you trail with the second low right here. So as price makes structure higher, even if it breaks down like this, like I talked about, the most likely move is going to be higher like that. So I could continue like trailing as it makes that second low. Like, my stop would be right here. So it's just certain rules that you can test for yourself. So that's the reason why I switched with that, because there's pros to cons to that. One is I can catch way more out of the move when I test that at staying longer in a trade. But there's also a con with that. There may be a time where price would have broke the MA and I stopped out my full second position. But it's just about what you're willing to handle based on the testing. If you look at your data and you really like the data that you've seen, then trade it. Not financial advice or anything, but you know test it for yourself. Anything you do, test. And you never want to stop testing and everything as well. Never want to stop testing. Like on my free time, I be testing. I be testing. That's the only way you can really improve and stuff like that. Okay. Um, almost forgot what pair I was on. Okay. Yes, it's moving nicely right now. It's moving like really nice. This looks nice right here. If we can get that pause, so this candle has to close at the 10 minutes, and then we have to wait another 15 minutes. But if we can get that pause, I'll take a an entry for my funded accounts. Hmm. And hopefully this is gonna be the move that pushes the price back on. But at the same time, it doesn't matter if price ends up failing. Management will help you a lot. Trade management. Like, there's so many ways to manage a trade. It's like insane. But that will really, really keep you in the game. Like especially when you having drawdown periods. Like what I found with the cut and losses, it really minimizes your drawdown periods, especially when you find a way to do like quick break evens, like how I talked about yesterday with the 1-to-1 break evens, where price makes a bit of fractal structure before that 1-to-1 break even, is because most of the larger winners anyway are just gonna run and run, and you're just gonna have to not care about those small trades. Of course, there's gonna be like trades that tag you out at break even and then go, but that's just a part of the system. And you're gonna see that when you just allow yourself to test and that system. Let's see. One thing I also recommend why people should journal is because you can't make improvements based on P&L. I see people try to see what they did wrong based on like the P&L on a trade, when that's not how, like, that's not the correct way to do it. Because how do you know? Because even when you follow your rules, right, you could still take a loss. So how do you know whether it was a good loss or a bad losses? And that's another topic too. Good losses versus bad losses. There's a difference. So when you actually journal your trades, you take the images, you write down everything that you did, what you did wrong, what you did right. You can look back at it, and you actually know. Now I want to talk about the topic of good losses versus bad losses. Like, people think like, all right, when you take a loss, there's something to learn from it. Yes, there's something you can learn from your losses, because you can look back at your data, but not all losses are to be learned from. If you, and the reason why I say that is because nobody has this 100% win rate. Losses are a part of the your system as well, and basically when you take losses that are according, like, that go with your system, and you take the wins that go with your system, those are called good losses, good wins, right? But when you take a loss that wasn't according to your system, you over risked or something like that, that's considered a bad loss. Even if you won the trade, I'll consider that a bad win. That's what you gotta think to yourself, because if you take a win, this is the worst thing that can happen. If you take a win and you completely did not follow your plan, the likelihood of you doing it again is very, very likely. And why is that an issue? But the issue is you don't have any data on what you're on that particular thing that you did. And since you don't have any data, you don't have any confidence. So you don't know what that thing is going to do long term. So that's just going to equal disaster. So make sure the losses you're taking are good losses. And keep in mind, I'm not saying that you got it 100% of the times you're going to be taking good losses and stuff like that. There are going to be times where you take a bad loss because we're human. You're going to make mistakes. That's one thing as well. And I talked about it yesterday. I made a couple of mistakes in January where, that could have been easily fixed for at least a break even month. Even though it wasn't a huge losing month, it was just 2%. Just a simple thing of moving like my entry a little bit higher would have saved me money. It would have saved me money because the spreads tagged me in early before even taking out the high, and stuff like that, and resulted to a loss. So certain like stuff like that, I would consider that a um a bad loss because I should have just accounted for spreads. But that's something I put in my journal. And now, if you see in the live streams, I always talk about wait, maybe I should market execute this. Either I'm gonna market execute it right here, or I'll just place it a little bit higher. For this case, I wouldn't market execute this. I will place it a little bit higher, given due to the fact that it's on a 15-minute time frame, so it can play around a little bit, and my hands are gonna get tired if I'm waiting that long. So we have 4 minutes of this candle. If we can make that pause, so like I said, one candle that prints before taking out this candle's high, I'll set a buy stop slightly above it, accounting for spreads, like I said, and see what it does. So basically, in total, I gotta wait like 20 minutes. So see how much waiting I have to do. Trading is this thing where you're waking up exactly at what 9 a.m. and you're pressing a button and you're in profits and you're done for the day. That's not how it works. These individual trades that you're taking, that's what makes you the money. All a waiting game. Ooh. And one tip I can give for someone who takes a trade on like a higher time frame is like do something while you're waiting. Like whenever I wasn't doing live streams, I would just be working on something. Maybe I'll work on a YouTube video, something for my business, something like that while you're waiting because these candles take a lot of time to form. But the whole reason I'm really like just in front of the computer is because I'm streaming. I'm just giving some value while I'm waiting. Something like a 5 minute that's better to watch because the moves are gonna happen, much quicker. Given that the higher time frame is aligning with multi time frame analysis. You just gotta know that price is gonna do whatever it wants to do. So if price ends up failing, it was gonna do that either way. There's no need to complain about it because there's setups that happen all the time. And similarly, if it doesn't make the pause and it just ends up shooting it up, it's okay because markets, set up all the time. Markets are gonna do what it wants to do. Similarly, like right here, I was assuming that I was gonna get stopped at break even, but I think I may have got stopped out at break even for one account for this challenge because I had a bit higher entry for my other one. Let me check if I did. At least I'm in it for one account because I can see it right here in the corner. Let me let me just take a look. Let me just take a look. But what I was saying is like the market is gonna do what it's gonna do. Like how that if I'm still in one account, but if see how I was assuming it was gonna be a break even and it ended up just pulling up. It was gonna do that either way. Let me see. This is the live one, so I'm checking my challenge real quick because that's what I entered on. So here, oh yeah, so I did get stopped out for the position for this challenge because I had a slightly later. I mean, this was a I think it was over here or right here. So I'm still safe for right here. That was very lucky though. I'll consider that very lucky. But either way, the market is gonna do what it does. So if it wants to come back down, it's gonna come back down. You know, simply if the market wants to shoot up to whatever, it's gonna do that. And one thing, let me go back on the 15. One thing you want to notice about me as well is I, even though I have an expectation, I don't know whether it's gonna happen or not. Profitable traders don't know whether a move will happen or not. Okay? Because all trading is a probability game. What is the probability of this happening? Okay, maybe this move can happen, but I'm gonna manage my risk just in case I'm wrong, because there's a chance I can be wrong. So I don't know whether it's gonna happen, but I know what these moves do look like when they do happen, because I have tested it multiple times, so many times. So you see how this cleared the high again? So what does that mean? I have to wait again. I have to wait for another candle to print before taking out that high, before looking to place the buy stop above it. Wait, ting. Just a waiting game. Ooh. Mm, mm, mm. There's so many ways to look at the market. Like the way how I just look at it, I can just because I used to switch my strategy so many times in the beginning, and like now just looking at it, I can just see like how everything is just playing out. Like the way people call things names, you can see it's all just the same thing. It's just a marketing tactic. That's why when I make a name for something, I just make it simple. I don't really like to name things because it just makes it complicated on the trader. You just need to understand what price is actually doing at that moment to get involved. No need to name things. Like me writing VBOS one, I just came up with a very vague initial like that's a abbreviation that just stands for validation break of structure. You know, there's so many ways you can call it. You can just call it demand. What else? You could call it Wyckoff if you wanted to. Watch this, right? An area that, like, when we have the flush, right? You could call that Wyckoff happening. Let me show y'all why. Matter of fact, you could call my whole strategy Wyckoff, basically, because this is basically accumulation happening. I forgot the exact labels of Wyckoff. I forgot it, but if you look at a schematic, right, a bullish accumulation schematic for Wyckoff, this is the flush that's basically happening. It's basically the schematic that's happening to make the move higher, the accumulation. So when you find a market that's overall bullish, you're gonna notice that whenever we have this consolidation point, it's most likely gonna make accumulation because that's what the market is doing overall. So I never get confused whether is it going to be a distribution, is it going to be an accumulation, because I'm only looking for buys in the overall bullish market. I don't care about the short term price action because especially my edge lies with catching, that trend. And a trend, it doesn't mean it has to be a full on going trend. I can get an entry right here, and depending on my stop loss, if my rules are met, I could have made money before this breakdown. This is looking really good. Like the candles are looking nicely and everything. Hmm. Just a waiting game. When you start treating trading like an actual business instead of a casino, that's when you're gonna actually see improvements. I mean, like actually treating it like a business. Write down your jot down journal. That's a form of treating it like a business, reviewing those trades, making improvements, looking at your data. All those are ways to improve. So the highs all the way up here, right here. Waiting game. If you can be more patient than most people, if you can be patient on the charts, you already put yourself ahead of most people. Simple like that, because most people are not patient. And the patience is just automatically gonna come. I feel like the patience comes during the demo testing phase, not the back testing phase. Because during back testing phase, you got to keep in mind these candles are moving way faster because you're just clicking away, even on a 5 minute time frame. You're just clicking away, so you don't know how much time you really got to wait until you get to that demo testing phase where you're actually showing up to the market and executing those same rules. And that's when it's gonna get. That's what's gonna really help you with that patience part. So it's like basically like the system is the the whole start to finish process from actually learning about your strategy. They all combine together. You can't skip one step. Like for example, I see people that talk about demo testing does not work. Trading on a demo doesn't work because you don't have the live emotions and stuff like that. I could tell you why most people think like that. Most people didn't do the prior work. Most people, when they hop on a demo account, most people just place high lot sizes, right? They're not even trading an actual system with rules. And obviously, when you place out just a high lot size, right, on a demo account, it doesn't take much for the price to go into profit. So they place a high lot size. Now, boom, they're up $5,000 from a bit of a movement. They close the trade instantly, and they keep on doing that repeatedly and repeatedly. And now they think they're ready. And then when they get the opposite results on their challenge accounts, live accounts, all these accounts, they're like, "Oh, the demo didn't work." Well, did you trade the same system that you back tested? Did you trade it the same way during demo testing? Because you don't necessarily gotta feel um the live conditions to change it to fix certain issues. Don't necessarily gotta do all that because demo testing is practically the same as live when you do it do it the proper way. If you don't do it the proper way, of course, it's not gonna feel the same. And I feel like this way about going about it works better than reading trading books. It works way better. I read trading books before, trading in the zone, all that. Yeah, I read trading books, but psychology trading books, it's gonna be more effective with the way I'm talking about because there I can there's probably a whole bunch of people who have read Trading in the Zone or has watched a long YouTube video on ways to fix your psychology with different methods, and they're still doing the same issues on repeat. Why is that? Because the confidence comes through repetition and seeing the data actually play out. It's all a business. Trading is this business. That's what it is. That's one thing I hear online that I like when people say trading is a business because it really is. Because if you had like, let's say if you had somebody that was watching over you, and it was like, okay, you had a boss that was telling you to trade, right? And he gave you a set certain amount of rules, and let's say to follow these rules, he automatically just pays you $100,000 a year, 200, $500,000 a year just to follow these rules. You do nothing more, nothing less. You're most likely gonna follow those rules because you don't care about the outcome. Your boss just said, okay, trade these rules. You get $500,000 a year. So what are you gonna do? Just trade the rules. Same thing. Just trade the rules that you tested. Whew, I talk a lot. making a making a high over here. Uh, you're using a bit. Oh, let's see. This candle closes in soon. Soon. You can basically see what I'm talking about with these are fractal breaks of structure. So this candle right here created the first break of structure, and as we pause, we're creating a second break of structure after, making this short-term bearish structure on the lower time frame. Like once you start zooming into price and just understanding like the candlesticks, everything is fractal, you're gonna like be like, oh wow, everything is like a moving part. Everything works together. All the time frames work together. And that's why it doesn't make sense for a structure to move so perfectly. And that's why my five when I was looking at that area and I thought price was gonna set up at this area, simply this area didn't hold up because it's making a bigger structure for a different time frame. And that's why I needed a confirmation to even enter this right here. Hmm. Um, okay, let's see. This would be like a perfect spot. Like if it paused at this spot, this would be like absolute a perfect spot because any two like if it's too high, I don't really like it as much, and it will have to have faster management because it's way too high. But this is just like in the middle, perfect regular management. Still can end up being a loss. Still can end up being a break even, or a large runner, or a small partial. So far this month, I have only taken two trades this whole month. Probably mainly because I started off on trading with the 15-minute and the 1 hour time frame this year. Because I haven't found much trades, that's why I switched down lower. But this month I only placed two trades. One of them was a break even. Wait, both of them was break evens. Yeah, both of the trades were break evens. All right, so it cleared the high right here. I gotta see where it pauses. Any too high, I don't want to look at it, and I'm most likely gonna hop off the charts because this was the only one that was clear. So I gotta see what it does. But what was I saying? What was I saying? Damn, I hate when I forget what I was saying. Oh yeah, this whole month I only took two trades, both were break evens. Also, quantity of your trades don't necessarily matter too. The quantity don't matter because when you focus on the capital now, that's where the money is made. Now, for example, let's just say you had $200,000 in funded accounts, right? You didn't take much trades because your setups weren't there. Let's just say you took the two break evens, okay? You may be down some commissions, and then let's just say at the end, probably like today, you take a nice small partial at a 1 to 2. You're already up $2,000 just like that. A 1 to 2 partial, 50%. That'll be on 1%. You're up. So you'd be up $1,000. Let's just say your other position got stopped out at break even, and that's all the trades you took. You're still up $2,000, and that's why I say have the extra income as well, because as you're growing as well, it's gonna be helpful. End goal is just the capital side, getting as much capital as possible. We'll just wait in. I know a lot of people be hating on indicators, but when you use indicators as a tool with price action, it can be really powerful because a strategy only works with the proper context, right? A lot of people, like most of the patterns you see that people trade, like regular patterns, all that, they can work. They definitely can work. The reason why a lot of people may not see success with it is they're trading it in the wrong context. They trade in just the pattern and not the context, right? And what do I mean by that? Let's just say these type of entries happen all the time, my entries. But let's say I'm trading it in a condition that doesn't go with my strategy. If I'm trading it somewhere inside of here, right? There's times where it sets up in somewhere in here. Like example, there's a there's an impulse, there's a small pause right here, fails down. There's times that where you, based on the context of the market, you shouldn't be trading a pattern or a setup. So when you compare it with the context of the market, that's when you will actually see improvements. So like a regular support and resistance trader, right? The market condition they probably want to trade in is a market that probably pulls back probably to the 50 a lot. And the reason why I say the 50 is because the 50 usually lines up with the last support turn, the resistance turn support. There we go. So for example, like this, if you see the average pullback right here, it's just pulling back the structure on average, then it's most likely most likely like the support and resistance for that will work out perfectly if the market condition is moving like that, because there's different types of trends and stuff like that. This particular trend, I wouldn't be interested in if it's like pulling back so deeply every time, because like I said, I like these short term strong trends. So a strong trend like that is gonna usually on average pause on the 10 and 20. Uh, or this can also work with like supply and demand, like certain markets that pull back deeply. You just gotta see the market condition that works. And that's why I'm able to like just look at multiple markets, because I can look at a market and be like, okay, that market looks trash. I'm not gonna trade it. A good example is this from yesterday. Yesterday I said gold looked trash because we was in. Yesterday was the 26th. Where is it? Yeah, yesterday we was in this area, this flush area. If I was trading this area, I would have probably got chopped out this area. And I said I did not like gold for a specifically a 5 minute time frame because of the where it was at. But when you're switching your time frames, you see more clarity. It will make more sense for a longer term trend with the stop loss covered right here instead of trading inside that area. So it's just certain stuff like that. Let me hop back on this. There's certain stuff like this that you just gotta realize. I need to get a break from talking. Mm, mm, mm. If it completely clears the highs, then I'm not interested in it. Because like I said, the higher it goes, the more quicker management I have to do. But it does look good because when you see price start to rise up like this, I talked about there's two types. The earlier one where you may get an impulse correction, impulse like the setup that's right here as it starts to move sideways. That's the most ideal entry, but more riskier, right? Because it's a lower entry. But when you get price starting to rise up like that, it could start a trend, a good trend as well. Because the basis of a good trend is when or a confirmation is when the MAs or the 10 and 20 start to rise up like this. Because at that point, if we imagine a move, so let's just say we had a small pullback like that. If we imagine the move to happen out of this, we can imagine the MAs start to extend out with price. Because the MAs I use right here, they just interact with price, right? So when we're consolidating or in stage one or Wyckoff, whatever you want to call it, right? The MAs are going to be moving sideways. As we start to move out of that move a bit, that's when it's going to start to extend outwards. So, and then the MAs are going to be extending outwards until it breaks down again, and then short term, it starts over the same thing. So we ended up clearing the highs at this moment. So there's nothing for me to do, even though I waited and it did exactly what I was expecting. There's nothing for me to do. So everything else was looking unclear for me. Actually, wait, hold on. Oh yeah, USD JPY it's not in a clear context for a 15-minute entry. So what I have to do to see if it makes sense to even wait for this is 1040 right now. I would need price to come back down to the 10. At that point, it will be right here. So what I typically do is to see if a move is likely to happen when it's getting late is I will look at the time frame I'm on, right? So I'm on a 15-minute time frame. So if I imagine, so each of these candlesticks close in 15 minutes, right? If I imagine a move happening right now at the exact time, would it make sense for it to set up like around like latest 12 o'clock, 11:30, one of those? So let's see. If this candle closed right now, it'll be 10:45. Let's see. If I imagine a candle coming down, maybe like this, it'll be like 11 o'clock. Then it will be like 11:15. Then 11 30. 11 45. 12 o'clock. I'm trying to decide if I would, because that's only if price were to move like exactly like that right now. I'm trying to decide, is it likely for price to reset back up? Because there's certain things I do like how I talked about right now with estimating based on the time it is right now to see if it's worth for me to still stay on the charts. Because we will need to reflush down for this to happen. Alright, so what I'm gonna do is I feel like it's a 50-50% chance. Like this move can start to happen like right now and just leave without me. Or can do this right here. So what I'm gonna do is I'm gonna just end the stream. I'm gonna keep an alert right. This is right around like the 50, or yeah, right, probably like right around the 50. I'll keep an alert right there. Yeah. So I got an alert right there. Is it set up? Usually it has. Yeah. All right. So if it ends up coming back down, I'm gonna be alerted for it. And then I can start back up the stream if it's before like 12 o'clock. But if it just ends up flying without me, you know, I'm not gonna hop back on the stream until tomorrow. So I'm gonna end the stream right now. And yep, appreciate it. I'm gonna be back tomorrow or later before 12, depending on what it does. Giving value, all that.